Okay, related to gold, Talha, your question. So, yeah, we're going to have the close for the week today and a new week next week. So, let's look at what happened this week on the chart. We've pushed up decisively up into the 70s, haven't we? We've come up from 24. Now, what I'm expecting, if we close this down below this trend line, so I'm just going to remove this from now. I'll make it more faint. Um, okay, so we've got this trend line here. So long as we continue to respect that, the bias is to the downside. And this wick merely represents all of the buying activity for this week. So the market is essentially long on the week, and we could see a move down into those longs. So come on to the 4 hour chart. So we've got sellers. We've squeezed into that short, taking out some of those stops, and that leaves a bearish bias to move into these longs for the week ahead. Um, so that may take shape over the course of the first part of next week, perhaps over a few days, leading up into the highlight that will be Fed Chair Powell, who will testify on Wednesday um, at 10 Eastern, 10 a.m. Eastern, and he's going to testify before Congress, whereby he'll be providing a broad overview of the economy and monetary policy, which follows this week's hawkish pause. Um, so, what that might mean for markets, really depending on the outcome of that, is clarification. Um, bear with me, sorry. Clarification on the uh, on the Fed's decision. Um, Now, in that regard, the focus is going to be on the U.S. data, and paying particular attention to the um, weekly jobs updates. Um, so we've seen noticeable reactions across precious metals associated with the weekly claims data. So that will be an important um, data event for next week, next Thursday, I believe. So keep an eye on that as well. But technically bearish, while below the trend line, um, and 1970 or thereabouts. Only really starting to become bullish when we start to move back in to the front side of the old bullish trend. I say old, I mean it's still relatively bullish, but we're starting to slide out of it. I'm talking about this trend here. So we're starting to slide out of that, and we're bearish well below it. Below, sorry, below the counter trend line, which we're coming up to test. The counter trend line is this, the old bullish trend line. Now counter trend line, so that's the thesis while we're below it for a move out of this consolidation. And the longer that this consolidates, the more coiled and the bigger the bigger the prospects are for a sizable move to the downside. And if I'm measuring the range of that so far, projection and extension of that range to the downside, you're looking at 1870 or thereabouts, and then the 1830s heading towards 1800 on a 200% extension of that move. So that could be the risk for the coming weeks to the downside. If we were to move back up into the trend, then the opposite is true to the upside. So measuring that to there, on the upside, 150% extension or range comparison takes you up to the highs, a little bit beyond the highs, which would be an interesting development for the foreseeable future for gold. But again, it all depends on July, the Fed in July, prospects of whether or not the Fed is going to continue pausing, whether the data is going to prove um, strong, which would play into the hawkish narrative that is currently surrounding the Fed for the time being.